All right, y'all, back to work. Boy, it sounds like a lot of you guys made some good money off that bear trap we talked about last night, so well done on that. Now, boy, we have a lot to talk about tonight. Speaking of bear trap, markets just gapped up at the Asian Open. Now we have a big move going higher, a handful of trading ranges. I would imagine everyone's trying to buy the next pullback, right? Buy the dip. Buying pullbacks, they sound so easy, but we all know it's not as easy as it sounds to time that perfect pullback. So in tonight's video, I want to give you guys two techniques I use each morning in our trade room to time the perfect pullback so you can get some money out of the market tomorrow morning. So charts are ready. Enough of the intro. Fantastic job today. Let's keep the good times rolling into Wednesday morning. S&P SPY all ready to go tonight. Nasdaq triple Qs are all ready. I have 4 important clues on the charts in front of us that are telling me where I think the winning trades are waiting for tomorrow. The first clue, one of the most important clues, is here on the hourly time frame. I know it seemed like we were pretty bearish overall going into this week, but as we talked about last night on the video last night, we anticipated this being one big trading range, and we're now rotating very bullishly, you can see there, off the low of that trading range. So we do expect the buyers to continue this move going higher until they finish off that rotation back up to range high. That's one really big clue right now on the higher time frame. Now, I've got a couple more important clues, though, help us time the entries on the lower time frame. Before we do that, though, let's check schedule for tomorrow, because the second clue tomorrow is we get some big PMI numbers coming out tomorrow morning, 9:45 Eastern time. It's not new home sales. It's not the beige book. The report I'm watching tomorrow is that 9:45 PMI composite flash. It's one of the biggest news reports of the week. That will be a market mover tomorrow morning, so keep your eyes open at 9:45. That's our second clue. Expect some volatility around 9:45 tomorrow morning. The third and fourth clues for tomorrow are down on the tick charts. Look at that gap up that we saw here. There's 2 more important clues here. Now, I use tick charts for entry timing. Tick charts, this is a 7,000 tick chart, upper left-hand corner for all the time frames. And if you're watching for the first time right now, that is the 21 EMA. It's pretty much the only indicator we need to make lots of money consistently each week. I use tick charts because they make pattern recognition. They make entry timing a whole lot easier. We use these in our trade room. There are 2 really big clues here on these tick charts right now. And big is the key word, a big move. We talked about the bear trap. We nailed that bear trap last night on the video last night. Now we have this huge move going higher. The reason why a big move is important is because big moves, they tell me to buy the dip, right? Buy the dip. Now, again, as I said earlier, buying the dip sounds very easy, but in my experience, there are 2 different types of strategies, 2 different types of setups I want to be prepared for after a really big move like this. So we know we want to buy low. I'm going to talk about 2 different types of ways in which to buy that dip. We're going to cover those as we go deeper in the video tonight. And the final clue is this range right here. If you know me well on these videos, you're a student of mine, the trade room, you know that ranges, right? They love to rotate. And what else do we know about ranges? We know that ranges, they love to break out, pull back. That's a big, big clue for us tomorrow as well. So let's put together all 4 of those clues. Bullish on the hourly, big move higher, big gap up here, and that range and that breakout. I mentioned earlier, there are really in these scenarios, there are 2 different types of kind of strategies I'm looking for here tomorrow. Let's cover the simplest one first on the S&P and SPY, and then later on in this video, we'll talk about what is a little more complicated for tomorrow, but if we do it right, it can pay off a lot bigger, a lot more lucrative for the second strategy for tomorrow. So the first one first on the S&P and the SPY here right now, I would love to buy that breakout pullback. Now, usually what happens is when you get a breakout pullback, it will usually be a 2-legged pullback. Think about a measured move, 1 leg, 2 leg. I've got that channel coming up off the high. I like that channel. I love how it lines up right around that breakout pullback area. Now, what I'd love to do is use a bear trap pattern. Wait for that breakout pullback, get down into an area of support, and I'll use what we call a 2-try bear trap, right? Let the bears try once. let them try twice. Remember, always a higher high because sellers want to sell high. Once those bears try twice, now I know where their pain is. Now I know where their stops are, and I can squeeze those stops for an easy bear trap winner going higher. Now, it's also very important to remember that the breakout leg of that trading range is a measuring leg. So once we know how deep that pullback is, then we'll know how big that target is. Makes sense? And now, before we take out that measured move target, we want to keep adding to our winners. Remember, the easiest way to make more money is simply to add to your winning trades. And as always, we add to our winners by looking for this simple pattern. First of all, it's a shallow pullback that barely misses the moving average. It's a higher high in price, and I'm gonna get in right below that low. So really one of my favorite trades for tomorrow, and again, this is kind of the first scenario I'm gearing up for tomorrow. We'll cover the second one, a bit more advanced tactics on the Nasdaq a bit later. But one of the first ways to do this is wait for that pullback, get that bear trap, keep on adding to your winner. And again, don't forget how to measure the breakout, right? The breakout leg right there. Once we know how deep that pullback is, then we know where that final target goes, and that'll make sure I can leave a runner to maximize those profits. Now, let's talk about some variations of this. For example, we may not get that bear trap down there. Every once in a while, there's so many buyers there, we may pull back, and this thing may just whoop and run right back up and fill that gap overhead here. So if I don't get that bear trap, what I'll do on these is look for a slight variation. If it V bottoms off that low, I'm going to now start looking for a new bull channel by drawing off the highs and bringing it down around that low. So I draw that channel like that, kind of draw it backwards off the highs like this. Now, very important, the magic happens now. Look at those prior swings and find a prior swing that lines up right around that low. There's lots of ways I can time the entry on this. I teach the entry tactics in our free video classes. But the bottom line is it could be a bear trap. Like I'm showing you here, oftentimes we'll get below that 21 EMA. Bears try twice for a 2-try bear trap. And again, the same basic idea applies, right? The size of that breakout leg, that will now tell me now where that final target will go. We call these pop and grind channels. They pop up, they grind higher. And whatever I do, I don't want to miss the first test is the best test off of that low. That is a slight variation of this first of 2 game plans we're going to cover tonight on this video. Also, one more variation of this is, oftentimes really, when I get these big moves up like this, we get a really nice deep pullback. We get a nice, beautiful bear trap, right? Bears once, bears twice, nice, easy winner going higher. But oftentimes though, in order to pull back, that momentum becomes really strong. And every once in a while, we kind of get lucky because these are my favorites. I love whenever I can get a quick first target, move that stop up to point of entry, and I love it when they come right back down again and take out that low. Now, do not confuse this. This is going to feel like a reversal. It's not a reversal, especially not after the 60-minute time frame we saw before, a few moments ago there with that big range rotation off of the low. This is a great place to do it again. We call these retest trades in our trade room, right? We get a first entry off that low, it pops up, doesn't keep on going, it rolls over, takes out that low. What's happening is the buyers are trying to dig lower to attract in more buyers, right? We're way high up right now after that gap. So whatever you do, do not let another leg lower. Do not let that fool you. It is another bite at the bear trap apple, right? So bears try once, bears try twice, squeeze those stops. And in this situation, the goal is very simple, to get back up and take up those highs. And as always, I want to go in, get that bear trap, and keep adding to my winners as we go. We love these retest trades in our trade room. So that is the basic of this first of 2 strategies I'm looking for tomorrow. Before we go to the Nasdaq though, and talk about that second more advanced, but oftentimes more lucrative strategy on the Nasdaq, let's slow down for a second because I know most folks watching right now, you know these patterns already. But if you're watching for the first time right now, this might be a brand new strategy for you. Don't you worry though, I teach this entire system in my free trading classes. In fact, I have a ton of examples of breakout pullbacks, bear traps, add-ons, retest trades. Guys, the markets are way too good right now not to be making profits. I want to help you time better entries on these on your own account. I'll put a link up topper for you, upper right-hand corner. Hit that link up there and take that free trading course because the strategy I teach in that video series will teach you a stupidly simple trick we use. You'll laugh how simple this is. We use it every day in our trade room that literally tells us exactly where the winning trades are going to be each day. Again, you'll laugh when you see how simple it is. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Again, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current strategy, hit that link that popped up there. Take that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is, guys, it is completely 100% free for you. Also, to keep in mind too, guys, I'm going to put all the important links you'll need to learn the roadmap, learn the entries, start making more money. Most folks, they start making money all on their own, all from that free video course. So I'll put the link down there for you. Start there first, down below the video, the description. And also, too, I post a ton of charts and videos and mindset stuff, psychology stuff on X or Twitter these days. If you're on X, give me a follow. Again, all the details you'll need to learn the roadmap and hopefully make a lot more money because of it. I'll put all those for you in the description of the YouTube video. Okay, so where did we leave off here? We talked about how there are 2 different types of strategies we look for after a big move up like this. We covered one of them. One of them, in this case, was that breakout pullback, and I gave us a couple different variations of it. One last thing here, if I'm wrong on this, if we run lower and, who knows what happened tomorrow, right? We got a bunch of tariff talk going on right now, a lot of stuff, a lot of known unknowns right there regarding tariffs. Let's say something happens overnight, and let's say we make that run lower, but we don't get a bear trap here and back up again. What if they were to hold that pullback and run lower? I love this idea. I love this aspect of it because now, look, back here, that's a range right there too. I can almost guarantee you right now there is a whole wall of buyers that would love to buy that 52, 62. There's something similar we'll see here in a second here on the Nasdaq. So if something happens overnight and the markets kind of freak out on this, do not forget this huge move going higher. And again, this is not like last night, right? Last night was bearish, but again, last night that move down was going against the higher time frame 60. All right, makes sense. Very important. This is not the same scenario as it was last night. This is a big move going with the hourly time frame. Last night was a big move going against the hourly time frame. Makes sense? Okay, so if this thing pulls back and all hell breaks loose and dumps like this, I'm doing it again. 1 try, 2 try, squeeze back up, V bottom off that low, retest trade. It's all the exact same stuff. Just promise me, turn off the news and read the chart. Turn off the news and read the chart. Right now the chart tells us buy the dip. A lot of folks thought I was crazy being a bull yesterday. But again, turn off the news, right? Turn off the news and turn on the chart. The chart tells us everything that you need. Let's talk Nasdaq now. I mentioned earlier we've got the first kind of game plan now nailed down on the S&P here. Over on the Nasdaq, I want to dive into that second game plan. A little more complicated, a lot more lucrative. We're going to cover that in a second. Before we dive into it though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos. So thank you all for the likes, subscribes, sharing my stuff with other trading buddies. Thanks for all of the ongoing support in the comment section. Now, let's roll up our sleeves here and talk about the Nasdaq. Again, the overall game plan right now is it's a bull move up into a trading range. I understand that the past couple days it felt very bearish, and if you turn on the news media right now, the news media, remember, their job is to scare us. Let's now go to the tick charts here. And again, tick charts, they're based on volume. They make pattern recognition a whole lot easier. And you can see kind of the same stuff, right? A big move higher here on the tick charts right now and a range breakout. Now, on the S&P chart, we talked about that breakout pullback. And I gave you guys a couple different variations of buying that breakout pullback. And we won't go over the whole entire thing right now again, but the same stuff we talked about on the S&P can be applied here on the Nasdaq. Now, I've been mentioning so far tonight that the second game plan here, the second game plan can be a little more complicated, but can be a lot more lucrative. And the most important thing is that after a very big move up like this, the markets, rather than pulling back for us, they oftentimes begin to tread water. You know, the moving averages have to kind of catch up the price action, right? That 21 EMA has to come up a little bit, right? So oftentimes what happens is we start going sideways now into a trading range. Now, ranges. If the trading gods are watching down on us, they're going to give us one of these ranges. And here's why. Ranges are a bit more complicated, but they can make us a lot more money because ranges, they like to rotate, right? They like to rotate. Now, combine a new range with a previous range, and now we start to get what I call stacked ranges. Very simple. If I see a new range overnight, which is pretty likely in this scenario, if I see a new range overnight, that range becomes a magnet. The previous range now it's ripe for a breakout pullback, okay? Now, if you understand how rotation works, the goal then is to get a pullback below that trading range, use that same bear trap technique, right? That bears try once, bears try twice. I like 2 tries because I want to use their stops, right? I like 2 tries because now I can use their stops. If you're caught short and you get stopped out, you have to buy your way out of that position. So I like to use a 2-try rule. We teach that in our video classes here at schooloftrade.com. I'd like to use that bear trap, run higher here now. Now remember, in a normal trend, we measure the breakout leg and a measured move, right? In this scenario, and this is why I said these can be a lot more lucrative, is now the amount below the range. Now you see why we love ranges so much. So now we know where the market now wants to go, and now we can use that same basic technique, that separation off the moving average, that higher high in price. Remember, add to your winners. If there's one scenario where you need to get the confidence, the guts to add to your winner, it's in a range rotation. Because range rotations are one of the most consistent things we know about any bit of technical analysis. So I love the idea of a range up here. Use the new range as a magnet, right? Use the previous range as a breakout pullback. There's not a lot of guarantees in trading, but if we see a range up overnight, these are very, very high percentage bear traps and add-ons and where that runner is going for tomorrow. You want to kick this up one more notch here? Let's go one more level of kind of complexity, okay? This is where people will get fooled on this. That's kind of the easier one. Now, let's say, for example, we start treading water here overnight, and rather than going lower first, we now go higher first. This will oftentimes fool people because, first of all, it's important to remember that we are way high up right now. Right? So I need to be careful being a buyer up here. I'll talk about this more in a moment. I'll give you guys some tricks on how to know when a breakout pullback is necessary here. What's very common though is after a big move up like this, right? Now we're way high up into a range. What's very common is a fake out breakout off that high. Be very careful buying as we break out above that range because again, we're way high up. We're not buying very low if we do it that way. What is most often will happen is it'll push up, it'll then pendulum swing or basically fake out break off the high now, and now we know where that level of support is on the other side of that trading range. Now, I'm going to warn you right now. This will feel like a reversal, all right? I can guarantee you right now, if you're not mentally prepared for this, you're going to miss this trade, right? You'll be like every other rookie that will chase after it and lose money. That voice, okay, that voice in your head that's always lying to us, especially in trading, right? That voice is going to say, are you sure about this, man, right? Because it will. It'll feel very bearish. It'll be very sharp. But remember, the best entries in trading are always scary. Write that down. My biggest winners are going to be scary. The sooner you embrace that fear, the more money you're going to make in trading. No pain, no gain. Get comfortable being uncomfortable. These are as uncomfortable as it gets. I've been doing this for a long time in my trading career. These are very uncomfortable. But remember, it's not a reversal, right? It's a natural pullback after a big move going higher. So what do? Do we blindly buy down here? Do I read tape or order flow? Do I look for a divergence on the RSI? You can if you want to, but I think you're wasting your time. In my opinion, let those bears try once, let them try twice, right? Squeeze those stops and run back up again. And remember, oftentimes, these will rip lower. It'll just boing right back up again. Oftentimes, they'll V bottom off this low. These can be tricky because, you don't want to chase after it. Find that channel. There's always this time where it bounces hard off that low and you have to shift your focus from try buying high up here, shift your focus now to buying below that channel low. This is a good example, this type of trade right here, a good example of being with us in the trade room because I can leverage my experience in these situations to go, okay, no, hold on, right? Don't buy up here, right? There's a very big difference between 1-2 buy down here, right? Very big difference between that entry and we start grinding higher like that, right? I don't want to buy that one right there, right? See the difference there? It's a small difference, but it really affects our risk reward ratio, right? My risk is here now, reward is right there. That's no bueno. That's no bueno, right? In that situation, I flip it from a 2-try bear trap to now go out and find that new channel. And now we basically get a better risk reward ratio now because now we're buying low. Now risk is here, reward is there, right? It's a much better risk reward ratio trade. And because of that, there are more professionals taking that trade, which gives the benefit of the self-fulfilling prophecy. So again, be very careful buying above that high up there. It will oftentimes be a fake out breakout after a big move up like this. But maybe you're wondering right now, well, how would I know, right? Who knows, right? What if it went sideways up here? How would I know when I could trust a breakout, right? It goes sideways up here overnight. How would I know? Would there be some sort of giveaway I could use that would tell me that this was a breakout I could trust? There definitely is. It's the 21 EMA. If I break out of that trading range and I start seeing this separation, right? Remember, separation is a huge clue. Look back over here, right? Separation. Is there any question about, right? See that right there? Separation, right? It's no wonder everyone bought underneath those swings. The bottom line is that separation is the clue. It is the clue for a breakout. So I'd love to get that up and back down again, but if we break out and we don't pull back, right? We don't pull back. We start separating off that moving average, shallow pullback. We're separating now. Okay, not my favorite trade for tomorrow, but now evidence tells us right now, okay, we should be looking for a breakout pullback off of that trading range, right? Think of that two-legged pullback. Think about that bear trap below that 21 EMA once, twice. Same stuff as always, right? Trap those bears in. And now remember, the breakout leg is the measuring leg, right? We know where the market wants to go now. So before we get there, add to that winner. I'm going to get that add on before we take out that measured move up overhead, all right? Breakout leg is always the measuring leg. So will we get a range? Will they break and grind away from that moving average? That's a big clue for a breakout pullback, but keep your eyes on that fake out breakout back down and don't miss that breakout pullback. Do not let that voice in your head, right, pick your pocket, tomorrow morning. All right, guys? Fantastic job today. Love seeing you guys make money. Let's keep the good times going tomorrow. That's the game plan for tomorrow morning, our trade room. Now, speaking of tomorrow morning, guys, the easiest way to start making money is come out and learn and trade along with us every morning at the opening bell. I'm going to put all the important links you'll need, again, to learn the strategy, start making more consistent profit, get your confidence back. Again, you'll love that free trading course and enjoy all the trading examples I include in that short video series. Then come join us every morning, 8 o'clock Eastern time. We'll do it together in the members trade room. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time, all right? Adios, amigos. Bye for now.